traders, welcome to your technical market update for Monday, the 2nd of February 2015. It's the first trading day of March. We have a lot going on this week, so let's see if we can take some pips from the market. Hope you've all watched the fundamental video. It highlighted that we do have a lot coming out, and it does kick off tomorrow with the interest rate decision from the RBA. But let's kick off with the New Zealand versus the US on the daily chart. As you can see from last week, we've still had this rally continue. The gap got closed, we continued to bounce, and then we started to reject this Fib 50 level, Fib 38.2 level. It's an old historical support. It then become resistance. Right now, that's the major resistance level, and we could possibly see that this major long-term trend, if I zoom out a little bit, you'll see this major long-term trend could be kicking into gear, and the next move could be lower. It's a very common pattern that we've had a big fall, a consolidation, a big fall, we've had a little reversal, and now we could be looking for a typical swing trade where the market's moved down, a slight retracement, found a very strong level of resistance, and then now looking to reject that and continue on the path that the fundamental support, which is to the downside as the US dollar strength story continues. So we'll have to see how that plays out. For now, if we are on the daily chart, if we were to zoom in and, oh, a bit too far. If we were to zoom in, you can see here that the major support, I'll just borrow this line, is here. And until this support level is broken and this trend line is broken, we have still got to consider that the upward momentum is still in charge. Even if the price action does take out this trend line and move down here, you can't say, well, it's broken the trend, it's heading south. We won't have absolute confirmation until we make a new lower low. So that's the low. If we make a higher low, well, then the trend continues. We move our trend line. If it takes out this low, we're in a downward momentum. So I don't have a trade for this right now, but I really do like the look of this price rejection here. Old support becomes resistance. It's a very simple, basic setup. Let's move on to the Australian dollar. That's what's in focus. And we had last week this huge engulfing bear candle formation at the Fib 50 level. We've had this consolidation, slight retracement. The overall trend is down. The economics and the fundamentals are bearish, so there's no reason why we shouldn't see more moves to the downside. If I go to a 4-hourly chart, you'll see that the trend's been broken, and we're possibly looking for the market to break the historical major swing low, which keeps getting swing low, swing low, swing low, keeps getting higher and higher. We've now taken out this one, so now we've got a lower swing low, and we're looking for the market to continue on to the downside. That could be really accelerated tomorrow with the RBA rate decision if we do get a rate cut. Now, I think the market is really expecting a rate hold, so if we do get a rate cut, we should definitely see the market make a run for 77 cents, but in my opinion, the statement following that is going to be quite bearish on the overall Australian economy. They can't deny it, and we could continue to see momentum follow through. And we could be looking at a fairly nice long-term bearish trade where the market could eventually get down into the 74-cent range after, especially if we do get an interest rate cut. So keep an eye on that. Trade the interest rate tomorrow in that if we do get a cut, take some pips to the short term. Maybe you do 2 orders. I'll be doing 2 orders, one in the short term to take up the market's initial reaction, bank some money, get my money out, and then a smaller order that I'll be holding for the long term. My stop loss will be up here at the old historical high, and I'm looking to trade it, down here to the 75-cent flat range and possibly extending into the high 74s. So it'll be a big long-term swing trade on the back of fundamentals and the fact that we've had 2 interest rate cuts in a row, pointing to the Australian economy isn't really healthy at all. So I hope you make some pips in that tomorrow, don't forget it. Let's move to the Great British Pound. We had this rising wedge that I've been following, had this massive engulfing bear. That's a very bearish signal, and then as a result, if we go to a shorter time frame on the 4-hourly, the market has fallen. We've had a pullback in a very quiet session on Friday where it just basically had a bit of a pullback and then drifted lower and really ended up going nowhere. And now we're on Monday, US dollar strength kicks in once again. We've fallen straight from the get-go and away we go. It looks very bearish. It's a very clear wedge. When we do break out of the wedge and we take out this support, there's no reason for it not to make a run down into here. If we take out this low, there's no reason for it to continue. So I'm pretty bearish, and it's not the fact that the UK economy is doing bad, because it definitely isn't. It's just that right now the US dollar strength is a far superior currency in terms of the eyes of the market. Well, it's all about market sentiment, and the sentiment right now is US dollar strength, and every currency is coming off on the back of the US dollar strength. And we also have a potential head and shoulders pattern. So whatever that pattern remains intact, here's a shoulder, and here's the other shoulder, and there's the head and the neck. So it's a head and shoulders pattern. We've got shoulder, shoulder, and head. And then if we take out this low at today's session, we should continue. And if we zoom out onto the long term, we could be trading this as a very typical rising wedge breakout trade. So keep an eye on that. But it's one that I won't be trading on the long term bearish. I'm not a huge bear in the pound economy, so it's more of a bunch of scalping trades. I'm not looking for hundreds and hundreds of pips out of shorting this because we do have some UK data coming out later in the week. I don't expect it to be hugely outperforming, and that's because we have had signs of a lower inflation level, and that has been pointed out by the Bank of England that they expect that in the short term. And don't forget, the data coming out this week is backward looking. Moving forward though, in the future, we could start to see some better than expected pound data pointing to an interest rate rise at some stage this year, and that's only going to support the currency. So right now, I'm not doing any long-term bearish trades on the pound, but this rising wedge, it's a technical pattern that you can't ignore. And whenever there's US dollar strength, and that's what the market sentiment is trading, let's try and make some money from it, trading through the level. So we'll trade a breakout of the lows here, and we'll take some money down to here. And if it breaks this support, we can continue going until we see some weakness in the US dollar strength, or we get some very positive pound data. The euro had a big breakout. We had this channel and it went on forever. It was quite painful because I get frustrated staring at the same pattern and talking about it every day. But we had a big move. That move wasn't anything to do with the Eurozone. It was purely to do with the US dollar strength, and that's where we're at. Now, it did pull up short of the previous lows, and the euro, in my opinion, is highly oversold, and we could see a bounce in it. But the bounce right now isn't going to come from any euro strength, and we've got some US dollar strength right now, so it's going to be somewhat suppressed, but there is a potential here for a double bottom. Fundamentally speaking, there is. Technically, let's see how it all plays out, but for now, we still have to look to the downside. I'm not here to call bottoms and tops because you're catching a falling sword. I like to trade what's in front of me, and I don't see getting in long right now as being the high probability trade. I can put my money into other trades and make a better return. But having said that, continue to look to the downside. We possibly could test a $1.11 if the US dollar strength continues. The resistance levels were formed on Friday, so this is a new resistance level. We had a big breakout, a little pullback, and then the momentum's continued as we've seen US dollar strength on Friday and today. So we could get today just come up, test $1.12, and then it could fall away if US dollar strength comes back into charge in the Euro session at the early parts of this week. Let's go to the CAD quickly, and we've still got this consolidation triangle pattern, and we just need a breakout of it. It comes down to oil. US dollar strength, we've seen a bounce. I did think for a moment there we were going to see a breakout of this as the US dollar story was quite stagnant at the early part of last week, and oil had a bounce. However, oil being as volatile as it is lately, it has come off a bit. Let's have a quick look at that, because the CAD is really heavily exposed to the world's story on oil. So we had oil have a bounce, pull back in a little consolidation, and this is where we're at. This support level is key. If we get a break of that, well, then it will give way and oil will weaken along with the CAD, and especially with the US dollar strength story, that'll only move this pair even more. So we'll keep an eye on that, and away we go. If we have a look at the US JAP now, we've been trading that. I put out a take profit. We took profit up here this morning after a pretty good run. We've been in it for a while. It consolidated. It was a little frustrating. I think $1.20 is a psychological resistance level, but I am still long US dollar in this fundamental story. So I'm waiting for a little pullback, and then I'll get back in. I'll probably be looking at historical resistance levels where it just couldn't break through in the past. If the price comes back into here, I'll be buying back into this region, and looking for long again. It was just a chance to take 65 pips off the table, knowing that we could potentially today being Monday, start off quite slow and the market really kick into gear with the RBA rate decision tomorrow, and we could just see the US dollar strength just start to pull back and close the gaps and consolidate a little bit. So I thought it might be an opportunity to get back in at lower levels. Yep, I could be proven wrong and it could continue on, but this is a triangle consolidation that did break out. We traded this portion here, we took profit, it's had a pullback, the US dollar did nothing, very frustrating in this portion, but now we're kicking into gear and we're about to head off on another US dollar charge. So we'll take some profit where we can. If it pulls back into this region, we will get back in again long, and hopefully we'll start to see this continuing trend here be the dominant play and the market follow along those lines. Well, that's the majors for you. We can have a quick look at gold. Gold, there's this historical level here of support. Look at it right through here. It's at a level of $1,200 an ounce, pretty much. I know that it says here 1138. That's just some candle wicks where it's had some false breakouts or testing the market slightly below, but it gets sucked back up above it. That's a very key level. And I think that we're going to find some support there, and we could see a bouncing gold. We'll have to see how that plays out. I have called the tweezer bottoms on the daily chart last week, and I said here's a potential buy, and I think that it's been a good trade, and it could continue if anybody wants to trade commodities. With the Australian RBA news, let me have a quick look for you at the Australian dollar JAP. Now, the RBA news is coming out, and conveniently we have the Australian dollar versus the yen in this massive triangle. And we're at a point of convergence, just conveniently on a Tuesday. Tomorrow we will have the interest rate decision. Now, we could get a breakout of these highs, or we could get a breakout of this low, and that'll set the trend for the future. So we could not get a cut, and the RBA could point to not lowering rates for the foreseeable future, or potentially not giving any indication as to when they will raise rates, cut rates, and the market could take that as a bullish sign. Oh, they're not cutting rates. They don't even have it in their statement that they're looking to do so in the near term, and we could get a breakout to the high side, but we could get a rate cut as a proactive move from the RBA, and prices could take out this low, and it's probably a pretty good shorting opportunity. This is a very large triangle, and potentially, we could look at the triangle rules. There's 680 pips there, and we could get a 680 pip breakout to the downside or to the upside, testing back up above these levels here. So that's a big pattern I thought I'd share with you. Hopefully tomorrow you trade the RBA news right. Following that, I will be coming out with my fundamental video, followed by another technical video. I'll be talking about the trades that I placed, and I will tweet live of any trades that I do place in the RBA news. And until then, trade well.